Okay, I see I have turned around transaction 4 and 5. So we'll just go in and look at transaction 4 now. So in transaction 4, they paid cash for supplies. They paid cash for supplies. So what are they receiving? They're receiving supplies. And what are they giving up? So what's the give and take exchange? They receive supplies and they give up cash in this case. So we look to see, how do these fit? What are the elements? We know cash is an asset and it's going down by the $300. So we know assets will go down $300 because cash went out. And then supplies. Is supplies, it's a cost. Is it an asset or an expense? Well, at this point in time, we've just purchased the supplies. We haven't used them yet. So supplies at this point in time is an asset. And it's going to be going up $300. So we've got $300 of supplies coming in, and we've got cash going out. So one asset going up, one going down. Let's go put that on the horizontal model. Okay, so we've got cash going out, supplies coming in. So we have an asset exchange, and we don't need to put anything on the other side because we're in balance. Transaction number 6, received $8,000 cash from customers for services. So what did we receive? The company received cash. What did they give up? Well, they gave up services. Excuse me. So they provided services. So let's identify these. Cash is an asset, and that's going to be going up $8,000. Services provided. Services provided, hope you recognize that. That's revenue. We earn revenue by providing goods and services. So this is revenue. Revenue is a component of retained earnings. And revenue causes retained earnings to go up. So we've got retained earnings going up $8,000, assets going up $8,000. We're in balance. So we have $8,000 of cash coming in. Let's go to revenue. We have $8,000 of revenue being earned, causing retained earnings to go up. So this side goes up $8,000, the other side goes up $8,000. Transaction number 7, paid a $500 cash dividend. Paid a $500 cash dividend. Well, given up is probably the easier one. We gave up $500 cash. We're not exactly receiving anything here. This really is a dividend, right? We're paying a dividend. So we're distributing earnings in the form of cash. So we kind of, go back. If we look at our prior page, cash is an asset, and it's going to go down. Dividends, on the other hand, dividends cause retained earnings to go down. So that's going to have an impact on retained earnings, causing it to go down. So assets will go down. That'll be the left-hand side of the horizontal model. Retained earnings will go down. And let's see, this is for $500. So let's go to our horizontal model. Okay, so in transaction 7, we know that cash went out for dividends. So causing retained earnings to go down and assets to go down. Transaction 8, we paid part-time employees salaries of $1,000. So we gave up cash of $1,000. And what did we receive? Well, we received employee services, right? The employees worked for us. So that's what we received. The employees worked for us. And then we have to think, well, what is that? So let's think those through a little bit. Cash, we know, is an asset. It's going to cause assets to go down. So we gave up cash, causing it to go down as well as assets. On the other side, so we gave up cash and we got that the employees worked and we received the benefit of that. That's actually a cost, right? We have a cost that we pay our employees. So let's go back over here. Cost can either be an asset or an expense. Well, we've consumed the employee services, so that's an expense. So employees worked, we're going to probably call it, salary and wage expense, but it is an expense. And expenses are a component of retained earnings, causing retained earnings to go down. So the employees worked is an expense, which is a component of retained earnings and a negative impact on retained earnings. So that was for $1,000. Let's go to our horizontal model. So on 8, we've got cash going out, and in exchange for an expense, and we will call that expense salary expense. I believe in Wiley Plus it'll be salary and wage expense, salary and wage expense. So those equal negative minus 1,000 equals minus 1,000. Okay, next transaction. Transaction 9 said the company paid utility bills of $140. So we need to identify what was received and what was given up. Well, if they paid the utility bill, what did they receive? Well, they got to use utilities, right? So they got to use electricity, gas, that sort of thing. And what did they give up? Well, they paid it, so they gave up cash. So let me rewrite that, cash. So we have cash, we know, is an asset. If we're paying it, it's going down $140 in this case. Utilities. Utilities is a cost. Is it an asset or an expense? Have we used it or have we not used it yet? Well, we've used those utilities for the month of May, so it's an expense. Expenses are a component of retained earnings, causing retained earnings to go down. So we've got assets going down 140, and we have retained earnings going down 140. So putting it on the horizontal model, cash will go down, and then we will have expenses going down, or causing retained earnings to go down, excuse me. So expenses causing retained earnings to go down, and we will label that utilities. And again, that keeps the equation in balance. So we're in balance. Transaction 10 says the company performed services on account to customers for $10,000. So let's start with what did the company give up? The company gave up services. So the company provided services, so delivered services. Clean that up a bit. Okay, so the company provided services. And in exchange, they did not get cash. They have a right to receive cash in the future. So they didn't get cash today, but they have a right to receive cash in the future. So they provided services, that's what they gave up. In exchange, they have a right to receive cash. Well, let's go figure out how do these fit into the elements of the financial statements. So if we provide services, that's revenue. Providing services is revenue. So we have service revenue. That is a component of retained earnings, and it has a positive or an increase impact on retained earnings. Right to receive money in the future. That's actually an asset, right? It's a resource that we have. And so we will call that a receivable. We have a right to receive money. It's a receivable. We will have an account with each customer. So we have an account receivable, which is an asset, and it's growing. So assets will go up, retained earnings will go up. Let's go put it on the horizontal model. So in transaction 10, we did not receive cash. We have a receivable, an account receivable. So that's going to go up for our $2,000. Sorry about that. That popped that up, didn't it? And then also we earned revenue because we provided services. So that will go up $2,000. So we have revenue provided. In exchange, we have this account receivable, keeping it in balance. Okay, one more transaction. Okay, in transaction 10, we had an account receivable of $2,000 because we provided services worth $2,000. Now in 11, of this accounts receivable, it tells us we collected cash of $1,000 of that. So we're going to collect $1,000 of that. So what's the company receiving? So in 11, they're going to receive cash, $1,000. It's coming in. We know cash is an asset, so that's going to go up. So cash comes in for $1,000, causing assets to go up. Now what do they give up? Well, if we collect on some of this accounts receivable, then I'm just going to abbreviate accounts receivable is what we give up, right? Because we're not going to have $2,000 receivable. If we collect $1,000, then we have a balance of $1,000 left over. Accounts receivable is also an asset, and it's going to be going down $1,000. So we're going to decrease assets $1,000 and increase them $1,000. Let's go see it on the horizontal model. Okay, so in transaction 11, cash came in, so it's going to cause assets to go up, and we collected part of that $2,000, so that's going to go down $1,000. So let's take a peek then. If I were to solve, remember this is the column for accounts receivable. So here's our accounts receivable. We have +2 and a -1. At the very end, I'm going to have ending balances. So when I take 2,000 minus 1,000, I'll get a balance of 1,000. So we have 1,000 remaining. Now I'm going to sum each of these amounts. So cash, when I take, the very first transaction, I can get this to bump up a little. Okay, so with cash, we started with 30. I'm going to subtract those, add that, subtract those, add that, and I'll get 26,360. And then I'm just going across the board. All I'm doing is taking the beginning balance. I start with the beginning balances. So with cash, 0. I added in 30, minus, plus, minus all of this to get the ending balance. So I just go across the board, getting balance after balance. And I'll show those. Okay, so those are going to be our ending balances. We need to make sure they're actually aligned. So I'm going to add up these here, and I'll get 37,660. And I'll add up on the liability and stockholders' equity side, and I also get 37,660. So when that happens, here's my total assets, here's total liabilities and stockholders' equity. When those equal, we know we're right and we're finished. Okay, now this problem doesn't ask for it, but I also want us to go a step further. Now you will not be doing this in the homework for Monday, or for your next class period, but I do want to take it a step further. We would be writing out the financial statements using this horizontal sheet. So, essentially, we have, the income statement is going to be prepared from these two columns. So I'm going to use, revenue of 10 grand, and I have all these various expenses that I would list out. And so I would write those out. Now I'm going to go do that in a minute. I just want to refer you to explain where the number's coming from when I put it into the financial statements. So we're going to have revenue of 10,000, and then we'll have rent expense, advertising expense, salary expense, utilities expense. We'll go to retained earnings. We'll have a beginning balance of 0. We're going to show our net income of that, and I guess there are no dividends. And then when we go to do the balance sheet, we'll have these balances. Put those in a different color. So when we go to do our balance sheet, we'll have these ending balances. So here's going to be cash, accounts receivable, supplies, equipment, liabilities, common stock, and of course we have to figure out retained earnings when we go to do it. Okay, so that's where the numbers are going to come from.